Welcome back to Islamic Finance Unboxed, your channel for getting insights and decoding faith-based finance in a modern world. In today's episode, we dive into a very common topic at the heart of Islamic capital markets, Sukuk versus bonds. On the surface, they may look similar. Both are aims to raise capital, both are traded in secondary markets, and both attract corporational investors. However, are Sukuk really just Islamic bonds? Or is there a meaningful difference in their structure, purpose, and ethical aspects? Let's break it all down. By the end of this video, you'll grasp how Sukuk work, how they differ from conventional bonds, and whether these differences matter from a financial and ethical point of view. What are conventional bonds? Conventional bonds are debt instruments. When you buy a bond, you're essentially lending money to a government or corporation. In return, the issuer agrees to pay you interest, also known as a coupon, over a fixed period of time, and then repay the original amount called the principal when the bond matures. So for example, if you buy a $1,000 bond with a 5% annual coupon, you'll receive $50 each year in interest, and after 5 or 10 years, whatever the term is, you get your $1,000 back. But here's the issue from an Islamic finance perspective. Interest, or riba, is strictly prohibited. Islam does not allow money to earn money without being tied to a real economic activity or asset. That's where Sukuk come in. What are Sukuk? Sukuk is a plural of sak, which historically referred to a financial certificate or Sharia-compliant financial instruments. They aim to replicate the economic function of bonds, but in a way that in the frame of Islamic principles. Instead of loaning money and earning interest, Sukuk holders gain a share in an asset, project, or business venture. That means when you invest in Sukuk, you're not a creditor, you're a partial owner. For example, a government wants to build a toll road. Instead of issuing an interest-paying bond, they could issue Sukuk certificates. Investors buy the Sukuk and become entitled to a portion of the revenue generated by the toll road. So instead of interest payments, Sukuk investors receive profit-sharing distributions tied to real performance. Key similarities: Sukuk versus bonds. Now, let's look at the similarities, because there are quite a few. 1. Purpose. Both raise capital for projects, governments, and corporations. 2. Market behavior. Both are listed, traded, rated by agencies, and held in investment portfolios. 3. Fixed duration. Both have maturity dates and typically involve periodic payments. 4. Returns. While the source of returns differs, the returns can look similar on the surface, like receiving 4% or 5% annually. In fact, for many institutional investors, Sukuk serve as an alternative fixed-income investment, just like bonds. But the real differences are in the mechanics and ethics. Key differences: structure, risk, ownership. Ownership versus debt. Bondholders or lenders. Their relationship is with the borrower, only financial and debt-based. Sukuk holders are owners of the underlying asset. The return depends on the performance of that asset or venture. Earnings basis. Bonds pay interest, riba. Sukuk pay profits, rental income, or returns on real assets not guaranteed unless explicitly tied to real use. Risk sharing. Bonds charge all the risk to the borrower. The fixed payment is committed. In Sukuk, risk is shared between issuer and investor. If the asset underperforms, investors may get lower returns. Asset backing. Bonds are typically unsecured or backed by the issuer's credit rating. Sukuk are asset-backed, meaning there must be a real, tangible asset behind the transaction. Compliance review. Sukuk must be approved by Sharia scholars, who ensure the structure doesn't involve interest, speculation, gharar, or prohibited haram activities like alcohol or gambling. Financial performance. Are Sukuk competitive? This produces a big question. Do Sukuk perform as well as bonds? Generally, Sukuk offer competitive returns, especially in stable, asset-rich sectors like infrastructure, utilities, and real estate. According to data from S&P and Moody's, the average Sukuk yield is comparable to corporate and government bond yields ranging between 3% and 6%, depending on market conditions. However, because they are tied to asset performance, Sukuk returns can sometimes fluctuate more than traditional bonds. On the upside, they may be more resilient during financial crises because they are backed by real assets, not leveraged speculation. Plus, demand is rising. The global Sukuk market exceeded $800 billion in 2024, and top countries like Malaysia, Saudi Arabia, Indonesia, and the UAE are driving growth. Why Turkey doesn't prefer it? There, market size of Islamic finance is almost 5% in national banking sector. Even non-Muslim investors are increasingly buying Sukuk as a form of ethical investing. Global economic system continuously searches new and trustable tools. Let's zoom out. Today's global economic system faces increased scrutiny. Trillions in government debt, excessive speculation, inflation, and unsustainable returns have made many investors question the system's ethical foundation. This is where Sukuk step in, not just for Muslims, but for a growing number of ethical and institutional investors around the world. According to the Islamic Financial Services Board, IFSB, global Sukuk issuance reached over $800 billion in 2024 and continues to grow, particularly in the Gulf, Southeast Asia, Africa, and even non-Muslim countries. Major international banks like HSBC, Citi, Standard Chartered, and Deutsche Bank now offer dedicated Islamic finance units and help governments issue Sukuk globally. For instance, the UK issued its own sovereign Sukuk. Luxembourg, Hong Kong, and South Africa have all launched Sukuk to attract faith-based capital. Why? Because Sukuk tap into a massive liquidity pool over $3 trillion in Islamic finance assets globally, while aligning with the growing demand for ethical, sustainable, and risk-sharing investments. Sukuk are not just a tool for Muslims. They are a financial innovation aligned with ESG values, sustainability, and long-term development goals. So, is there a meaningful difference? Definitely. While Sukuk may look like Islamic versions of bonds, they are built on structurally different ethical, legal, and economic principles. Bonds emphasize fixed returns, debt, and interest. Sukuk emphasize asset ownership, profit sharing, and tangible economic engagement. From a Sharia viewpoint, this difference is not just semantic, it's spiritual and structural. Sukuk aren't just an alternative to bonds. They are a bridge between modern finance and Islamic ethics. The popularity of non-tangible markets like cryptocurrencies is growing every day, while traditional markets and stock markets are becoming less popular. It looks like this trend is having a negative effect on faith-based financial instruments too. When it comes to dividends and earnings, does the observed surplus earnings ratio seem pretty similar to each other? This makes the whole earning and benefits issue more controversial. If there's a key difference when it comes to payment commitments and risk sharing, what's the deal? So, what even is risk sharing? And what about for big public investments in things like airports, bridges, and roads? What's the deal with risk? When talking about risk sharing, so, is it more likely that there's no real risk, or that there is a risk, but it's just called something else? That's a wrap on today's episode. If you found this comparison useful, please like and subscribe to learn more about Islamic finance. This is a curious topic for the finance sector and the wealthy who have faith-based concerns. This channel is enhanced by the participatory input of its followers. Next up, we'll explore takaful versus conventional insurance, how risk-sharing replaces risk transfer in Islamic insurance models. Is insurance halal? Until then, stay ethical, stay informed, and may your finances be faith-aligned. In this channel, we will think together and broaden our horizon mutually. Put your inputs with comments, critics, and congrats. Pushpin. This is Islamic Finance Unboxed. Wait your comments. See you soon.